Okay, hello everyone, and welcome to our today's session. First of all, I wanted to thank Thunes for their partnership and support in preparing this session. So we're going to discuss a topic everyone is talking about at the moment, buy now, pay later. We're all very passionate about this subject, and we have many exciting stories and learnings to share here today. So thank you for taking the time to join us. My name is Oana Ifrim, and I'm a lead editor at the Paypers. The Paypers, as you know, is an independent source of news and analysis for the global FinTech, payments, and commerce industry. Okay, so today we're going to talk about buy now, pay later with a fantastic panel of experts who are very, very, very good at what they do and know an awful lot about the buy now, pay later industry. I can promise you that. But before I turn it over to our experts for introduction and panel discussion, I have just a few housekeeping notes for the audience. So how can you participate in this webinar? Well, we'll be having a discussion of approximately 40 minutes, and then we're gonna leave some time for audience Q&A. So you'll all have the chance to address all panelists, no worries. So if you have questions, please send them at any time to the presenters in the Q&A tab, and we'll get to them during the Q&A. It would also be really, really helpful if you could maybe mention to whom you would like to ask the question. Secondly, we will also be launching some polls throughout today's webinar as we are really, really keen to learn more about the audience. So we are very much invite you to participate by selecting your responses when they appear on your screen. Lastly, today's session is being recorded to be available for viewing post-webinar. So without further ado, I'm pleased to introduce our panel. Okay. Today we have Jeremy Orenbuch, who is Senior Business Development Manager at Thunes. We also have Arvin Singh, CEO and co-founder of hoolah. And we also have Justin Forsythe, Equity Researcher at Credit Suisse. Thank you so much for joining us, Jeremy, Justin, and Arvin. I'm now inviting you to share more details about yourself and the company. So, Jeremy, I'm going to jump to you first.
Sure. Hi, everybody. So, yes, I'm Jeremy Orenbuch. I work for Thunes. Just to specify, Thunes is a payment service provider. We're headquartered in Singapore, but we have a global footprint. We have offices across the world in Nairobi, Shanghai, London, Paris, and New York, amongst other places. And we're specialized in cross-border payments. So we do international remittances. And more to the point, we've built a network of connections to over 300 types of payment methods globally. Buy now, pay later is quite an important part of that. So we're coming from the view of a platform that has a global view of payment preferences in the world.
Thank you. Arvin?
Thank you. Hi, everyone. My name is Arvin. I'm co-founder of hoolah. hoolah is Asia's leading buy now, pay later business. Started back in 2018, formally when we introduced the business in Singapore first. And recently, a few months ago, we were acquired by Shopback, the leading cashback business here in Asia Pacific as well. So working together in bringing those two solutions together. And spent a significant amount of time in payments across WorldPay, Visa, and other payments businesses over the last decade.
And Justin?
Hi, everybody. How's it going? Great to be here. So, yeah, my name is Justin Forsythe. As mentioned, I cover the payments and fintech industry from an equity research perspective in EMEA. Previously spent several years in the U.S. covering the same industry. So have deep industry knowledge kind of throughout the entire payments value chain. I talked to many folks such as the Arvins and Jeremys of the world kind of over the last several years as we've been digging into the industry and researching it in its fullest. So happy to be here.
All right. Okay, great. Thank you so much. So as you can see, we have great speakers lined up for you today. Okay, so now let's move on to today's agenda. Okay. So why is buy now pay later so appealing for consumer and retailers? That's the question. So today our panelists will answer this question by discussing the following areas: the global state of affairs of buy now pay later, legislation and regional differences, the current challenges of buy now pay later and how these can be tackled, and the future of the global buy now pay later industry. I'm sure you're all looking forward to unpacking this information. So happy to hand over to our panelists. First, I'll turn it over to you, Jeremy. Thank you.
Yes, thank you. So just to get started, I think it's important to define what we mean by buy now pay later. It's quite a large term that's used to cover quite a few different types of models. At the very basis, a buy now pay later is a short-term loan that's taken on by a consumer at the point of purchase, which allows them to buy a product and then pay for it at a later date down the line, typically with either little fees or no fees at all, depending on the model. So commonly in the market, there's a few different models like I mentioned. You have financing, which is kind of the older type of model, where you get a loan over 6, 12, or 18 months, depending. The consumer gets to pay it back over that time and has to pay some interest. That's offered, for example, by Klarna. You have credit, which is basically like credit card, but without the plastic. Notably, that's been offered recently by PayPal, where you can basically pay for 0% interest anytime over 4 months, after which interest will accrue if you don't pay back. You have also invoicing payments, meaning that you buy the product and then you pay it back either in 14 days or 30 days, depending on the market that's in. That's quite popular in Germany. And then more to the point, and I think the most popular one and the one most people think of when they talk about buy now, pay later is payments and installments. So typically the way that would work is the consumer will pay about a nominal fee, maybe about 25% of the value of the item, but depending on the payment method, and they will pay the remainder of the money owed over 3 or 4 months, again depending on the market, with no fees attached. So hoolah, for example, is a good example of that type of model. I was thinking maybe we can move on to some of the numbers, just to show how important it is.
Yes. Arvin?
Yeah, sorry about that. I'm trying to find a mute button as usual on the new platform. No, thanks for that, Jeremy. I think it's great to start with that framework of defining what we're talking about as we start to talk about the growth, because I think some of the numbers that we're throw around are more specific around the pay in 3, pay in 4 type of model that Jeremy's referring to from a global standpoint. And we do see a massive amount of growth, especially in the last couple of years, I think driven from a lot of digital adoption and digital usage on e-commerce, specifically through COVID. And the use of buy now, pay later has certainly taken off at this time. I guess at the same time as we look forward, a lot of the predictions are stating very clearly, and I guess I'm a bit biased with looking at my part of the world, but in Asia specifically, not just the current amount of adoption, but the amount of adoption expected over the next few years as well is quite massive. The usage is actually not, I would say, while adoption is in a market like Singapore, 38% of users having used BNPL, in terms of the total volume of e-commerce that it accounts for is still single digits. So you can imagine that there's a long way to go still for repeat usage, continued usage, and further maturity of the product in this part of the world. A lot of that will be driven by the sheer growth of e-commerce as well in Asia. In particular, we're seeing a lot more first-time users through COVID, and we expect that that usage will continue. I think one of the controversial statements or topics right now is what happens when physical retail gets back to normal. Are we going to see a shift in or change in that type of customer behavior? Generally, the approach that we've taken was use that time period to build an in-store solution that actually works exceptionally well and creates an experience that is tailored for physical retail. We throw around kind of the omni-channel experience a lot, but it's really creating that experience that hits customers' expectations when it comes to physical retail, where the digital experience is also hitting the right expectations when it comes to digital, and tying those two things together so that customers can choose wherever they wish to shop and have a great experience that's kind of guided and driven by their expectations based on the channels. So lots of growth, especially being in this part of the world, seeing the tremendous adoption across Australia, and almost 6 million BNPL accounts across Australia at this stage, and in Southeast Asia or the rest of Asia Pacific, we're really still in the early days of seeing the adoption and growth of BNPL.
Okay. Thank you so much, Jeremy and Arvin. So you just mentioned some very, very interesting numbers. I would also like to add some of them here as well. You already mentioned that the vast majority of the growth in buy now pay later specifically comes from Gen Z and millennial consumers. So we also noticed that in the wake of pandemic specifically, according to experts, 60% of the millennials and Gen Z view credit cards like something too risky, so they usually prefer buy now pay later because they present a much friendlier alternative. Actually, we've been reading a report from a Sense, and they were stating the fact that in July 2020, 37% of American adults had used the buy now pay later service, and by March 2020, the number has jumped substantially. So with almost 60% of Americans saying that they use a buy now pay later service. So this is a really, really impressive increase of 40% in less than a year. And things are still looking great. According to a report from Juniper Research, the buy now pay later market will reach $900 billion by 2026. So we're looking forward to see how things are going to develop. But I'll hand over to our experts to share more details. Maybe Jeremy, could you perhaps share some information about how buy now pay later works and what it can bring to businesses?
Yeah, sure, absolutely. I mean, basically for merchants, being able to offer buy now pay later will do a few things. I mean, number one, obviously, is that it'll boost their sales. It'll do that because they see that customers have a tendency of having a larger basket when they use buy now pay later. On top of that, they'll increase their conversion rates as well. So it's really all about getting more and more sales by adopting the payment method that they want. On top of that, by having buy now pay later means that a merchant can go and target new markets. So obviously, like if we're looking at cross-border here, but a merchant who wants to sell in Singapore, if they're based out of the US or the UK, it would make sense for them to offer hoolah in order to target local consumers in Singapore, especially if they match the verticals that are popular with buy now pay later, such as fast-moving consumer goods and clothes and different verticals like that.
What are your takes, Arvin, in terms of the benefits for the retailers specifically?
No, absolutely. I think certainly echoing some of the notes that Jeremy had there. I'm currently in Malaysia meeting a series of merchants through the week and hearing from them directly that feedback of where we're impacting their business, and a lot of it is on that conversion rate, and spending so much time, energy, money, effort from the merchants to optimize that checkout flow to make sure that they can drive that conversion, and then implementing our solution to help further impact that conversion. It's very clear to them that we have had that, and again, up to the 20-30% mark in terms of the impact that we've had there. Certainly, we do see that the total GMV has gone up, not just from the conversion standpoint, but also we're seeing a lot larger baskets for retailers as well when it comes to a buy now pay later transaction. So that overall experience for the merchants has been fantastic for the growth of their business. And we're looking at how we can work even closer with them as well. You know, I mentioned we've just gone through this M&A process where we're now in a business that does a lot of sourcing traffic and driving traffic to retailers on their digital experience. Now that's something that we can actually add into the mix and impact even more, because it's another one of those pain points that the retailers come to us and say, how do we help? How can you help us solve that problem? We'd like to attract more customers, new customers, different segments of customers as well.
All right, thank you, Arvin. And Justin, what are the benefits for the consumers? Because you also have to take into account the end consumers, and what do you think are the main benefits for them?
Yeah, absolutely. So I think this is kind of one of the key questions you have to ask, right? Is you know, if I'm a consumer, why would I use buy now, pay later versus a credit card, right? And that's pretty obvious. But you know, then you start getting to different forms of buy now, pay later, and we kind of hinted on this before, but you have quite a few, right? You have kind of the consumer-facing application, whether that's a hoolah or an Affirm or a Klarna, and that has a pretty robust user experience, right? We're talking about, you know, potential for additional products layered on top, right? So they have invoices, they have bank accounts, they have a marketplaces app, right? Which then layers in the benefit of merchants and a two-sided network, right? And so I think that's kind of an important key as to kind of in other pieces of the market, like let's say someone like a Chase or a Barclays might be doing something that is more of a product embedded within the existing credit offering. And so I think, you know, this speaks to kind of the point of who is adopting these solutions, right? People, I think, who are more incumbent with regards to their financial services solutions and perhaps kind of more mature in terms of their life cycle might be kind of staying with their existing provider because they can, you know, effectively get a buy now, pay later solution by doing a post-pay type of thing with their credit card, such as, you know, a bank would offer, or doing an upfront kind of buy now, pay later offering. Whereas I think, you know, you're starting to see more of the digitally native folks who kind of, one, are losing trust with banks, as, you know, various surveys and you know, public information have indicated. For instance, I know a firm called that out in their S1 along with many others, that, you know, younger consumers are looking to kind of switch up the way financial services work, right? And so, you know, this has really been, I think, kind of effectively like lightning in a bottle for buy now, pay later providers, that they struck it at the perfectly right time to be able to do this. And then kind of the follow on is, you know, what do competitors like PayPal have to say about this? And, you know, will they be able to capture some of that younger segment, onboard new users as a result of this? Or, you know, are they going to more or less stay with their incumbent base and kind of capture volumes from them with regards to buy now, pay later?
Indeed. Thank you so much, Justin. We are also wondering, is the evolution of buy now, pay later the same across different markets? Maybe Jeremy, you can share some details about, you know, regulatory initiatives and regional differences. There's been a lot of talk lately regarding legislation, regulation of buy now, pay later. So we would love to hear your thoughts on that.
In terms of regulations, that might be Justin's domain, but in terms of like the global aspect of buy now, pay later, certainly. I mean, you know, as a platform that looks to international payment schemes, we do see payment methods, buy now, pay later payment methods going everywhere. If you look, I mean, you know, Europe was kind of the home market with some big brands like Klarna, which is one of the leading buy now, pay later schemes in the world, of course. And so you see some brands like Klarna, like Affirm, like Afterpay/ClearPay, who cover multiple markets in multiple countries. But on top of these global brands, we see a plethora of like localized payment methods coming up. So, you know, in Europe, for example, you have ScalaPay that's in Italy, you have Secura in Spain, In3 in the Netherlands. You know, these are payment methods that are homegrown, that cover to their domestic markets. France is Alma. France also has a whole legacy buy now, pay laters from the French banks, payment methods like Cofidis and Floa, and then you also have new players like United Pay and such. That's just to show you Europe. So just in Europe, every country has like their own domestic scheme. In the United States as well, so you have brands like Sezzle and Zip, which are quite popular. In Latin America, you see Nelo and Addy. Nelo is in Mexico. Addy is a Colombian buy now pay later, but it's expanding into Brazil. You have Boleto Flex in Brazil also that offers, I think, up to 24 installments. So each kind of market has their local preference based on the type of the means that the people have there and where they're culturally the preferences that they have. I think it's an interesting picture, and for merchants, for payment service providers and platforms who really want to support their merchants to grow their business in other markets, it's really important for them to have a view of which buy now pay later schemes are relevant in which area, so they know who to target. And I think buy now pay later is really an important vehicle of that growth, because it targets specifically the segment of the population, meaning millennials and younger, who really are the ones that shop online the most and who are quite keen to adopt new technologies. And buy now pay later is really driving that growth.
Yes, indeed. Well, as we all notice, legislations, or maybe the lack of legislations, can be sometimes a challenge for the providers. So maybe Justin can elaborate on the different buy now pay later legislations across the world.
Yeah, absolutely. Happy to do so. So, yeah, for one, I do see some questions in Q&A. Us specifically are not in the business of kind of forecasting regulatory regime change, but it's pretty clear the writing's on the wall with regards to where things are going, right? Meaning, you see various different regulatory bodies out there, whether we're talking about the FCA, European Commission, down in Australia, right? Many different regulatory bodies looking to put definitions on buy now pay later, and I think this is a lot of times this is driven out of fear rather than facts, right? I mean, we can get into particulars on default rates and such, comparing buy now pay later products, whether we're talking about kind of this pay in four, if you will, type of product, or a longer term installment loan. But the point being is that a lot of that is feels like fear of the unknown, right? But so we have some specific slides here, kind of walking through some of the different regulatory regimes out there. For instance, right now the UK is doesn't really have any specific regulations, though there's been continued calls to regulate. I think the biggest fear with regards to buy now pay later and regulation is people are not necessarily worried as much about one provider as they're worried about people stacking, right? And what do I mean by stacking? Well, I take one loan from Hoolah, Sezzle, Afterpay, PayPal, etc. And if this is not checked by a credit agency, you have the ability to effectively stack these lines of credit on top of each other, and you could get into a debt spiral. And so I think this is mostly from what I've read and heard, what buy now pay laters are kind of worried about, and what potential regulation may be focused around is creating a kind of standardized process for tracking this. And as it stands currently, these pay in four installments, where you give about 25% upfront and pay the remainder over remaining 6 weeks, are not a lot of times classified as a credit product. So by that nature, the regulatory regime doesn't have really any power to force anything on anybody with regards to that. It would fall under kind of the more regular financial services regime in most jurisdictions. And so a lot of people, kind of view this as an opportunity to get their foot in the door and begin talking about this as a kind of new and hot buzz topic and word within the industry. But we can obviously see where things are going, and regulatory regimes are certainly, it appears, going to tighten up over the coming months and years.
And in what markets do you see most activity in terms of regulation? Maybe UK or Australia? I don't know.
Yeah, it from my understanding, it seems like at the moment Australia is kind of the farthest along at this point with regards to regulation, and many of the others are more or less just talking around it at this point and looking to kind of set something out. And it's, I guess the follow-on question is, does this, and which I think we maybe mentioned, is what does this do to buy now pay later providers? I mean, hard to say, and I think maybe Arvin would could be potentially better placed to handle that in broad strokes. But I think maybe it even provides them a bit of a moat to an extent, or has the potential to, if they're kind of talking with the regulators and helping to develop kind of the ideals around it, and then have the correct connections into, say, credit agencies or whoever's they need to connect into to get that certification from the regulators. So I think it could actually end up being an opportunity rather than a hindrance for those that are already kind of well entrenched in the segment already.
All right, thank you. Actually, we just received a question from the audience regarding regulation in Africa. Are there any insights on that? Any research that we can share? Who can take this question?
Yeah, I don't have anything specific to add with regards to any specific countries, but I think I think was this the one around Ethiopia? Yeah, I don't know anything specifically about Ethiopia, but unless there is specific regulation out there, you can kind of assume it would be not regulated within the kind of regime of lending products, right? And that's kind of the default, if you will, is that it doesn't fall under the purview of those regulations. So unless the Ethiopian government or whichever government it was had been doing so, I think it's pretty likely that it's regulated outside of that framework.
All right, thank you so much. Jeremy, Arvin, would you like to add something here?
I mean, just about Africa, it's still a new market really for buy now, pay later. I mean, you have payment methods around. I mean, you have Thank You Cash in Nigeria, Lipa Later in Kenya, and that actually covers, I believe, some markets in the Horn of Africa. But these are new and growing companies. I think the largest market for buy now, pay later that I could see is South Africa, which is led by Payflex, which is one of the local buy now, pay later schemes there. And to give you a bit of an idea of the size, Payflex, I believe, is around 1,000 merchants that are active on it, and about 100,000 consumers, or maybe a little bit more, maybe 150,000 customers. So I mean, it's sizable for Africa, but if you compare it to like Klarna, for example, that says that they have 145 million users, and like 250,000, or actually I think the latest numbers they said it was 400,000 merchants. It can give you an idea of the difference in scale. Obviously, Klarna is the biggest one, but Africa, as far as I'm aware, for buy now, pay later, is a growing market. I think it's worth around $4 billion a year, and it's looking to expand in this area of growth and investments. But in terms of regulation, I don't think there's been much put in place at this time.
All right, thank you. And also, there's no doubt that buy now, pay later is the rise of buy now, pay later as a payment method is quite spectacular. But yeah, as with anything new, there is room for improvement as well. So what would be maybe and I think that's something that everyone would like to ask, what are some of the challenges that buy now, pay later has in its current format? Who would like to take this question? Maybe Arvin or Jeremy?
Yeah, I can make a quick comment first on this, and Jeremy, please feel free to jump in. Maybe to tie it back to the last topic with respect to regulation and the complexity of being in a market that's a whole bunch of different countries put together and called a region, that's actually governed and behaves in a very unique way as you hop borders across Asia. Every market has its own regulatory perspective, its own regime, its own currency, its own way of working, its own merchants, and its own approach from a consumer standpoint as well. I think that's one of the most complex things, not just from a BNPL standpoint, but just from starting a business in the financial services side or fintech area in this part of the world. It means that you do have to go into multiple countries to be successful and to get scale. But then you face that complexity of all of those different factors that come into play when it comes to going cross-border. So that's one thing that really stands out for us. And we saw that as an opportunity to go quickly. Within the first 12 months, we had launched our second market, and we saw that as the way to really create a differentiator for our business as well from the early days. So it is difficult, but it can create that opportunity for you as well if you can execute and find the right things that you can kind of build at a group level or at a regional level, and then the right ways to localize to complement that to make sure that you can scale domestically in each market.
Thank you so much.
Yeah, and I'd also add that, for buy now, pay later, if you're a merchant and you want to board one buy now, pay later scheme domestically, it's manageable because you're familiar. But if you're trying to take 3 or 4 different schemes in different areas and regulations, like you point out, it becomes quite challenging to manage. On top of that, it can get expensive. It can take quite a long time to integrate, depending on the payment method. I'm thinking here of Klarna, for example, that has 4 different types of solutions. They have the financing, they have the pay later in 30 days, they have the pay in installments. If you want to offer everything, it's different flows every time that a merchant needs to accommodate. From a pricing perspective, in some cases it can be like a grid. We have a different rate for different types of models for different types of countries, so that can be hard to manage too. And the more countries you target, the more difficult it becomes. So obviously, not to push our solution that much, but like working with a partner, either a payment service provider or a company like Thunes that already has the integration done with all these payment methods, can simplify the life for merchants and for PSPs wanting to expand.
And how long should the buy now, pay later implementation take?
It depends. It could take 3 months. It could take longer. It could take 6 months. Some cases. I mean, Arvin, maybe you can talk about your experience, but I think it depends on the complexity of the product.
No, definitely, and it depends on the complexity of the platform that the merchant is using as well. If e-commerce, it can be, we've done same-day integrations with merchants before because their setup is so straightforward, and they've got somebody on the team that's readily available to do it. We've actually had a merchant write into us in the morning and was live by the evening. But again, for some of the larger platforms that needs to slot that into a sprint and it's a couple months away, that can be quite complicated. It can take quite some time to get there as well. I can say just, Jeremy, not to be that specific about the Thunes solution, but just going broader, we're big believers in working with channel partners that can create that integration point and that connection point to merchants as well, especially for the global merchants, because it is something that they're looking for. And we talk about to our partners all the time about how do I make sure that I'm getting the right solutions for the right markets across the world. And having a single point of connection can really make that a straightforward approach for them.
Thank you so much.
So,
and yeah, Justin, please go ahead.
Yeah. No, I was just going to add, we were talking about kind of, we'll say potential challenges, if you will, or just things to look at in the coming years for buy now, pay later. I think, I think a lot of the existing financial services providers were kind of caught sleeping, if you will, a little bit on this. And, there is a lot of investment and strategic focus going into this area now, whether you look at, the networks putting out buy now, pay later solutions like Visa, MasterCard, whether you talk about players like PayPal, whose, cumulative buy now, pay later volumes are now 7.9 billion, and they're charging the same merchant rate for acceptance as their traditional PayPal button. And so one thing to watch is, the bifurcation and split between those, willing to use these traditional financial services and kind of stay with the status quo versus those, that are willing to use a point solution such as a hoolah, a Klarna, for the slicker kind of user experience, kind of loyalty solutions, things that, generate effective engagement versus a PayPal maybe is a little different in that nature, or other traditional financial services providers. So I think it'll be key to watch and see how the existing players continue to invest in this space and see if they can win back perhaps some of what they have lost over the years, or if, this is truly something that is here to stay. And it does seem like those kind of scaled platforms with a cult following, if you will, are going to continue to be able to scale. And, the traditional financial services providers are going to be right there alongside them, perhaps hitting a different segment of the market.
Thanks, Justin. To your point, we all think that with the increase in presence, the buy now, pay later industry will only grow fast and significantly in the next year. So what should we keep a close watch on? What would be the future of buy now pay later? Justin, Arvin, Jeremy, would like to answer this question?
I can just say something that I've been seeing with some of the payment methods, and I'm thinking Klarna actually is one of the ones doing this, is that they're trying to grow an ecosystem around just payments. So with Klarna now, they have a Klarna app where you can go in and stores, merchants will have a storefront inside. So the consumer can stay within the Klarna ecosystem and shop without leaving, so to speak, and just see merchants advertise their wares on the Klarna app. Klarna is not the only one, but I can see the big brands moving into that to try to keep customer retention and to grow sales for those participating.
Yeah, I'm happy to jump in here a little bit too. And I think this is just going to go a little bit on the back of what I said previously, but I think, what you're going to see is like a continued rollout, in my opinion, of kind of like the existing financial services providers kind of doing some sort of product type of approach. And, I do not believe that they're going to, necessarily push that super hard, but it will be available kind of for people to use. And you're going to have the continued kind of scaling of some of these, regional players within buy now pay later, such as a hoolah, Klarna, Affirm, Afterpay, etc. And one other thing to note is you've seen like a lot of consolidation within this space, right? You've seen Zip, Sezzle, Twisto. So there's been several regional players that have, perhaps not the scale that some of the larger players have, that perhaps, you could see further consolidation in the space as time moves on, and as, scale becomes more and more important to, I guess even hoolah got acquired. So to scale the solution, but perhaps Arvin has further thoughts.
No, definitely a good point to hit on there, Justin, in terms of that consolidation that's coming, and part of it, and even in the less mature BNPL market in Asia, we've already started to see that consolidation happen. The competition rose quickly, lots of providers popped up, but surviving this business model, and I see a lot of questions coming through the Q&A on the business model, it's a pretty complex one. It is taking on risk of a transaction. It is settling to a merchant before you collect from a consumer. It is charging a fee to that merchant, but it's predicated on customers paying on time. And I think that's a large difference from a traditional financial service where a significant amount of fees are made from customers not paying and paying an interest rate or a large late payment charge that drives the revenue for that business model. In the pay in 3, pay in 4 model, it's very difficult to generate revenue from that aspect of the business, because the goal is to get customers to get this great, delightful experience, pay on time, work the cash flow the right way, and actually scale it with the right customer base. So it is quite complex, and it's going to be difficult for some businesses to scale effectively in this way.
So what?
So I guess licensing as well. I was going to say, Arvin, I mean, maybe you have thoughts on this, but like, the kind of idea of using a partner to originate loans versus, doing it yourself, perhaps that's a bit of a gating factor as well.
So what should we expect? Will buy now pay later overtake credit cards in the future? What would be your estimations?
It's a bold prediction. I think it comes down to certain customer segments where we'll certainly see that happen. I don't think it's going to be across every customer segment, though.
Okay. So what should we expect? I think that would be a question for all of you. What we should expect in the future in terms of buy now pay later? What are the things that we should really keep a close watch on? Are there any, maybe, I don't know, maybe some estimations in terms of the market growth that you'd like to share?
one thing I can say, which I don't think we've hit on yet, is kind of the idea of a credit replacement product, right? And I think one thing that we've kind of spoken about historically pretty in depth is this can be regionally focused, right? So if you look at kind of buy now pay later penetration statistics by geography, as we've talked about kind of earlier, there is limited penetration in say APAC and Africa, right? It's still kind of a fledgling product, but in some of the more developed kind of markets such as Australia or parts of Europe, right? Buy now pay later penetration can be up to like 25% of e-commerce sales, which is staggering, right? And that's very geographically and culturally focused. Talking about countries like a Germany or a Sweden, where people don't really use credit, and within Europe, interchange is regulated, so they're not really offering credit rewards. In the U.S., credit rewards or interchange is not regulated, so banks have been offering traditionally high rewards to consumers. So they're incentivized to rack up rewards on their Chase card or their Amex, et cetera, and then go ahead and spend that on themselves at the expense of a merchant. And so we believe that, over time, it might prove harder of a shell to crack in the U.S. on a holistic basis versus some of these geographies where debit spending is more popular and there's not rewards base for credit spending versus countries like the U.S. where there's a high propensity for credit cards that provide rewards and stacking of those credit cards and redeeming of those rewards, etc. And so we would expect penetration in the U.S. to be lower when the dust settles than perhaps in Europe, Australia, some other geographies.
Thank you, Justin. Good to keep in mind. We'll keep a close watch on all these developments. Thank you all for a really nice presentation. I think it's about time for us to take some questions that were sent to us during the presentation. We have really interesting questions here. I would like to start with the first one. Are there any examples of buy now pay later being used in the service sector? Would like to take this one.
Sorry, yeah, absolutely. I mean, it'd be good to understand more specifically the reference here, but we're already into services, if I'm honest, and providing the solution across a variety of verticals. I think the most recent new vertical really tapping into is naturally we're traveling again, and that's certainly a place when it comes to experiences, hotels, as well as air travel. Places that we can play in, but the experiences side is certainly a place in the service sector where I think that we can definitely see a lot of growth with BNPL.
Thank you, Arvin. Justin, Jeremy, would you like to add something here as well?
Just adding on the travel side, I mean, there's a website called Fly Now Pay Later, by the way, just to show you that people do use credit to buy plane tickets and such. Though it is considered a higher risk industry for buy now pay later, who have to front the cash right away to the merchant. But it is a growing sector.
Okay. Thank you so much. Thank you for answering that. Next one is, which are the top benefits of buy now pay later? Justin, maybe you can take this one.
Yeah, I mean, at its core, right, the benefits to the consumer are the ability to smooth your income, right? I think that's, the generally understood reason why you'd be using buy now, pay later. Although I think as we kind of walk through, there's network effects related to some of the larger platforms where there is a bit of a loyalty and an engagement perspective, which is, I think, the reason why you might see people using a Klarna, account product, basically, right? So eventually, as you kind of build the consumer affinity, you start to see that flip. And I think, perhaps, I don't know, maybe Arvin or Jeremy have better statistics or stuff they can point to on this, but, there's certainly conversion rates and shopping cart conversion uplift that many people point to with regards to using buy now, pay later the merchant side that kind of leads them to be willing to pay a higher take rate than they would pay for a regular old debit or credit card or other mode of payment.
Thank you, Justin. Can we go to the next question, or maybe Jeremy and Arvin would like to add something here?
I think we can keep going on to the next one.
All right. So the next question, the research from PayPal and BigCommerce found that only 1 in 5 US merchants offers buy now, pay later. So do you expect this number to grow? And for which markets are buy now, pay later almost mandatory?
Maybe I can say a word on that. I mean, the strict answer for the US, I mean, Justin was talking about it a bit earlier, but the United States is a country that's addicted on credit. So any product that does credit, I think will do well. So yes, I would say you could expect buy now, pay later to grow in the US market. I mean, which markets is it mandatory in? In Europe, absolutely. I mean, Scandinavia is like Sweden is the top country in terms of a percentage of population that use buy now, pay later. Germany is very popular as well. I was saying earlier, it's more for the invoice payments. The Netherlands is also very big, and the UK. The UK is a very big market for buy now, pay later. Leaving Europe, Australia is a huge market as well. I mean, the market I would even say might be saturated over there because I think you have over a dozen different types of players over there. So yeah, I mean, I would say Europe, Australia, and the US would be mandatory markets to offer something.
Thank you, Jeremy. We'll keep a close watch on that. Next one, a really interesting one. Which segment produced most revenue for buy now, pay later? Who'd like to take this question?
It's an interesting one. Without getting too specific on pricing by vertical, it's a difficult one to answer. Actually, it's a business where we try to manage risk across the portfolio, and that's probably the biggest trigger or driver on how we can look at the cost side. But on the revenue side, we certainly try to keep it competitive, right? Because I think that pricing is one merchant talking to another merchant. It's important for us to have a strong position on that pricing in terms of what we're charging. So, I can't say that one specific vertical jumps out to me where it's a revenue differentiator.
What I would say, just to add on that, is that some buy now, pay laters are more specifically tailored to certain types of verticals. So, I mean, Klarna clearly started their business by targeting millennial women who wanted to buy clothing. That was kind of Klarna's core market originally, which can be reflected by the branding that they use and the sort of the kind of artsy commercials that they have. I mean, they're segmenting a specific demographic here. And you have some other buy now, pay later schemes that might have larger basket sizes, larger transaction limits, who targeting maybe an older crowd. I'm thinking of OpenPay, which is an Australian payment method, but it's also in the UK. I mean, they're targeting, I think, older people, I mean, my age, or 40 to 50, who want to buy maybe an expensive couch that'll cost $5,000, instead of just buying something for $200 or $300. So I think the vertical will change depending on which segment of the population the buy now, pay later scheme is targeting, and that's one of the factors that a merchant or a PSP should factor in when they're deciding which buy now, pay laters are right for their consumer base.
Great, thanks. What's your take on that, Justin?
Yeah, no, I think I really have nothing to add. I think that pretty well covered by those two guys. So same page.
Thanks so much. And what impact do you think the move to regulate buy now, pay later in the UK will have? Are other countries likely to follow?
Yeah, I think this was covered, pretty extensively at one point, but it just kind of seems like we're moving in that direction holistically, and I think again for people who are well positioned and kind of aware and working with people on the regulatory front, I think it could prove to be a moat.
Thank you, Justin. And another interesting one, what's your take on utilizing buy now, pay later for digital services?
That's a bit of a tricky one. As far as I know, it's not really used for that. I don't think buy now pay later schemes that I'm aware of will actually accept digital merchants. Arvin correct me if I'm wrong, but here with digital, it's tricky because often the transaction value is quite low. So I mean, why would you want to pay later for something which is like $10 or less? I mean, depends what digital service you're purchasing, but microtransactions or even subscription fees for a service like Netflix, for example, these are small amounts, and typically for small amounts, you wouldn't be using a credit type product.
All right. Thank you, Jeremy.
Arvin, did you have something you wanted to add to that, or no?
Nothing else on that. It's a spot that we certainly don't play around with digital. Yeah.
Well, Arvin, we have a question for you, actually. When is hoolah coming to Africa, Nigeria?
Specifically Nigeria. Wow. Okay. That's fantastic. I was in and around Africa in a few countries a few years ago. I was already seeing a bit of advertising for more traditional installment products, but a bit of a pay later flavor to it, especially when it came to how the advertising was being done. And certainly looked at it, asked questions, tried to get some insights while I was there to understand the opportunity. And I do think that across a few different markets, certainly Nigeria being a large market, Kenya, I think was mentioned earlier, around South Africa, markets where there's definitely potential to expand a business like hoolah. Definitely timing plays a big role in that. I won't oversell the opportunity for us to be able to do something outside of Asia at this point. We're certainly very much Asia focused and Asia centric, and there's many countries here that we'd like to be able to expand into as well. So I think there's a firm focus of where we are right now, but certainly aspirations of where we'd like to get to in the future.
Okay, thank you. Another interesting one. Is the user experience with buy now pay later same or varies differently across various buy now pay later providers? What are the commonalities across different providers?
I think Jeremy touched on this in the early stages of the presentation, just on the pay in 3, pay in 4, and some of the structures, the monthly payments or 3 or 4 months. With some nominal amount up front, 25% or 1/3. So I think there's some commonalities there, but of course the traditional products can be quite different, much longer term, longer duration, potentially with some processing fees or interest tied to it, with the, call it, more traditional installment products. I don't know if there's any other call outs on commonalities.
Thanks so much. And a really nice one. Do you have experience or success stories? I really like this one. Of using buy now pay later in microfinance or in vulnerable segments and in the informal sector? Who'd like to
more so on a specific customer base that I would call out in terms of the gig economy customer usage. And I think, Justin, you mentioned this smoothing out effect on the cash flow earlier when you were speaking. That's definitely something that we've seen and insight that we've gotten from the gig workers that are using buy now pay later, because it helps them smoothen out the cost over a period of time where the income that they have can fluctuate quite a bit on a daily basis, on a weekly basis, on a monthly basis. And being able to spread that cost over definitely is a very, very valuable solution for them.
Thank you. Justin, is there anything else you'd like to add here?
No, I think that's pretty good. Yeah, I haven't necessarily heard of any specific like microfinance use cases, though I'm sure they exist out there.
All right. And the last one, what impact do micro conditions have on buy now pay later? That is, what impact will the forthcoming increasing rates have on both buy now pay later demand and supply?
Imagine this is interest rates, yeah?
I guess so, yes. would like to take
It's an interesting one because we're kind of in the early stages. Kind of tying back to the business model, the intention is that we need to settle to the merchant first, right? So we need to pay out. Generally, we have to borrow from another financing business to be able to pay the merchant first. So to contextualize the question a bit, the rates potentially that we're being charged from a financing standpoint could go up as global interest rates go up. Reality is we pay pretty high rates from that standpoint already, well above any type of normal industry practice, because just the stage of business that we're in at this point, where that's kind of baked into it. So I actually expect, despite a global increase in an interest rate, we're probably going to be able to drive the rates that we borrow at down further, just based on scale of the business and growth across the region. But it is an important thing to continue looking at, and I think it's quite a sophisticated call out, actually, to kind of recognize the impact that could have on the business.
Okay, thank you so much.
What I would add to that real quick is that, right, like, as Arvin was talking about, it's like a cost of goods sold effectively for their business, right? Like, more or less, the funding of the buy now, pay later is they effectively need to be taking out loans to be able to make this whole process works. And so if you're lending out at 0% and, the cost of financing is continuing to go up, right, the kind of intrinsic value of your financing is much lower than if interest rates were close to zero, right? And so, on top of that, then you perhaps talk about financing onto further investors who might actually end up buying the loans kind of in the secondary market with structured financing deals. And so those might have to be structured differently. Perhaps, interest could, perhaps start popping up or increasing with these individual deals for those that do have interest. And so you probably would see some differences in structuring and things like that. And so it's really a cost of goods sold issue, and then perhaps a investor demand issue on the back end with structured financing deals.
Okay, thanks so much, Justin. Okay, so those are all of our questions. Arvin, Jeremy, Justin, anything else you want to touch on before we close the webinar?
I think there was just one question that I saw pass at some point, which was a question on whether or not buy now, pay later was relevant for the unbanked or the banked. The answer to that is both, obviously, to a certain degree. But it's true that for unbanked segments of the population in markets like in Latin America or in Africa, if people don't have a bank account and don't have a credit card, they don't have access to credit in any other way than through buy now, pay later schemes would be willing to extend that to them. So certainly in emerging markets, the unbanked could turn towards buy now, pay later, and we see that happening right now.
Thanks, Jeremy.
Thank you.
All right. So I guess this concludes the webinar. So as we see, buy now, pay later is kind of becoming the must-have for a successful global business. So it is a must-have from what we see. So I guess, both shoppers and retailer can agree that customers who use buy now, pay later tend to spend more, buy more, shop more frequently, but also to be more loyal to the retailers who provide it. Especially young consumers around the world are increasingly turning away from credit cards and traditional banks, looking instead at buy now, pay later option. And of course, because it provides more convenience, flexibility, transparency, zero interest rates, and so on. And also for retailers, the benefits are obvious, from bigger and better rates to more exposure to their business to enable better customer experiences. So thank you so much, Arvin, Justin, Jeremy, for the informative and fantastic discussion today. I've learned a lot. I'm sold. And thank you all for attending. We hope you've learned and enjoyed this presentation. Some quick notes before we end the session. Right after the webinar, you'll receive a post-event survey. So we appreciate if you could take 1 or 2 minutes to share your input with us. And as I said, we also recorded the session, so you'll be able to we'll be able to send it to you the link to rewatch it, or maybe share it with your colleagues. And for more details, feel free to visit our speakers' website if you're interested to learn more, or maybe to get in touch with our speakers today. Okay, then take good care, and we'll see you next time.